Welcome back. You're watching the opening trade. Now it's time to take the focus on some stock picks, and for that, let me now welcome Vinita Sharma, Head of Research from Narnolia Financial Advisors. Vinita, good morning and welcome to the show. Now, first up, let's talk about some of the stocks which you're liking, and the first one I will assume again that's Axis Bank. Why do you like, and what do you think again where it is right now in the context of the credit cycle and also the plans for business growth?
So hi Piyush, good morning and good morning to all the viewers. So the first pick for investment purposes I would recommend is Axis Bank. So we as a house are quite bullish for the corporate lenders, and we expect a good amount of revival in the kind of growth that is expected out of them. Axis Bank is expected to grow 5 to 6% above the industry level growth, and for that they are taking the right steps, and we are very confident on the new management, and we feel that from here on the profitability for Axis Bank will not be lumpy, but it will be more stable going forward. As regards the net interest income, if we understand, it is expected to grow around 14% at length with the AUM or the loan book, and even there is supposed to be a stability in the net interest margin. The asset quality, which has been the more focus area for the company, I think that's improving, and the slippage ratio is also reduced. Most of the slippages are now from the watch list. There could be one quarter more of some surprise in the provisioning, but I think that from after a quarter or so it should all get very stabilized. The PCR for the company is around 62%, which gives a lot of confidence for, as regards the profits are concerned. Also, on a price to book basis, it is currently trading at 2.2 times forward FY21 earnings, and looking at the entire space, looking how the growth will come and the kind of liquidity push is instilled by the government, we expect corporate lenders from here on should do better, and there should be capex related growth going forward.
Right, Vinita, I have a question, and that question is, what do you expect again from the bank in context of the capital raising plans they had announced again recently? From that purpose, do you think that is something which is going to be a slightly a sort of factor as an overhang for the stock price, or you think that market perhaps again is going to price in that very quickly, and we should be preparing for more sort of credit market share which the bank is trying to take?
So they have announced around $1.5 billion of capital raising plan, and the capital raising for any bank is a part and parcel of the industry, and it is required for the growth. Though we were expecting this to happen a year later, because for the current growth, I think we had modeled that that kind of capital was enough, but then. I don't think that's too big a problem. Definitely the ROE will dent a little bit, but at the same time the price to book or the valuations will give you the opportunity. So I think that is important for the growth going forward, and it's part of the industry norm. So like I take it very positively, because that will give us the confidence of the kind of growth we are expecting. We are expecting it to perform, a higher 5 to 7% higher than the industry level. For that, definitely there are plans, and this was very much built in for Axis Bank.
Right. A quick follow-up before we take your second call, Vinita, and that on the Axis Bank. Looking at the various data points, sometimes they confuse you, and again they make you believe that there is a very sharp slowdown which is happening. If there is a sharp slowdown, then again you start worrying about demand, and then you start worrying about credit growth rates, you start worrying about the private capex cycle. But for Axis Bank, where do you think that sort of silver line is going to come from any particular sector? Because cycle to cycle, banks, they find strength in particular sectoral credit growth rate. So is there anything where you're really bullish on?
Yeah, see, there is a lot of space which has been made vacant by the NBFC's lending, and that I think is a very good space right now for the the banks, where they because NBFC has been lending a good amount of money, and that has eaten into the loan book of many of the corporate banks. And I think once the NBFC slowdown that has happened, and it will take some time, I think, for them to catch up again with the industry. In the meantime, I think all the corporate lenders have a very good space wherein they can just merge in and give that kind of a loan to the corporates.
Right, again. So that's the word on Axis Bank. Now let's take the second stock, and that's SBI Life. Vinita, what's the target price you see for the stock? Insurance, something again we keep on talking about, a very long-term story, large population, a natural sort of recipe for strong long-term growth. But why SBI Life? Number of policies they are selling a lot, so perhaps that is something which is making them stand out. But how do you see again the stock, the company growing from here?
So one, as you rightly said, Piyush, that SBI, the insurance sector in India is quite under penetrated, and that now, as market participants, now it's known to everybody almost. So one, the industry I think is supposed to grow, and SBI comes with a very good brand franchise. We have been seeing that LIC is losing market share continuously, and that is being grabbed by SBI Life or HDFC Life or one or two more insurance player. And SBI has a very strong network channel through Bancassurance. It is able to sell its product very well. There are huge amount of investments being made in the distribution channel currently, so a lot of people being added. Also, the points of distribution is being increased. The 13-month persistency, as in the renewals that we are seeing for insurance, particularly for SBI Life, has increased by around 240 to 50 basis point in the last quarter, year on year, which shows a very good trend, as in we, because that marks a base for.
Allow me to interrupt you. Does that indicate the bank is actually getting aggressive, or I should say, sorry, let me correct myself. The insurance company again, SBI Life, is it actually getting aggressive? Because one of the conversations that we had with one of our guests was that normally people don't see SBI as a very aggressive bank. So again, they carry that image and again go across to SBI Life and they think perhaps the private players are going to be more aggressive. SBI Life can't be aggressive. What's your opinion on SBI Life?
See, Piyush, I think over a period of time, SBI or SBI Life, they have changed the operations, and now we cannot say that they are not aggressive. I would say they have changed on the technology front. Also, they are working, and they are, coming in at length and breadth of the private players. So, it's a boon for SBI Life that it has SBI's backing with them, and it's good to capitalize on the opportunity that they have. The growth is there in the industry, and it's important for the companies to go and sell insurance, because it is the need of the common person.
One question will be for our viewers, as again you are bullish, we can clearly see that. What's the sort of average ballpark number you see for the stock again to really grow its earnings by over the next 2-3 years?
So I think the embedded value for the AUM right now is around 1,41,000 crore for SBI Life, and the embedded value, I think it should grow around 15% CAGR, at least minimum 15% CAGR for the next 3 to 4 years. So we are currently we are trading around 2.4 times, I think, FY21 embedded value, and that gives an 1 year sort of a target can be around 900. But for SBI Life, it's something that you can sit and hold and not be very, conscious on how the every quarter earnings, emerges. Because I think it's a story play, it's a play on the industry.
Absolutely. Again, the moat is coming from the industry, distribution network, distribution channel, very long-term annuity income, again also long-term premium generation that allows again the company to really again plan a lot of quality asset liability framework here, and that's the hallmark of insurance business, which is now seen as a proxy like the banking industry grew. So interesting two picks, Axis Bank and SBI Life from Vinita. Vinita, as always, it's a pleasure having you on the show and getting all the insights and stock picks for for our viewers again. So those are the two stocks right there on your screen, Axis Bank and SBI Life. And while we are talking to Vinita again, let's see again if the peer stocks of SBI Life are also doing good in the trade. Earlier during the